Good morning, grade 12. Sorry, I couldn't make it to our lesson today. I was just having car problems. I just wanted us to go through Classwork 15, which says cash flow statement from investing activities. It says Bradley Bros Limited is a company which specializes in water polo equipment and kit. They supply all areas of South Africa. The financial year ends on 30 June 2021. It has been tough year. It's been a tough year for the company, and so directors have decided not to declare any dividends at the end of the year. Then they gave extracts from the financial statement of Bradley Bros Limited. They gave you land and buildings. At the beginning of the year, it was R1,000,000. At the end of the year, it is 1,850,000 rand. You can tell that your land and buildings have actually increased by 850 because it doesn't depreciate. It's easy for us to see that when it goes up, how much was purchased because you just subtract the two carrying values, which is just your original post price. For vehicles, you're given 335,000, and that is the post price, and accumulated depreciation is 163,480. Okay. Then they told you that the only depreciable non-current asset the business owns is a delivery van which was bought on the 1st of July 2017. On 1 January 2021, Bradley Bros decided to sell their delivery vehicle at book value, and the original price of this vehicle was 335,000, which had needed constant maintenance since January 2021. So the only reason they sold this vehicle is because it was just milking money from the company, as it needed to be constantly maintained. And as a result, as I've said, it's useless for you to have a car that is working, but it's milking money from the company. And when you look at the cost that you incur to maintain this car, you will actually pay less or more the same amount if you were to buy a new one, which will increase the economic benefits because a new investment will be reliable for a while, so resulting in you making more money than incurring maintenance cost. And now let me just do this quickly. I'm going to draw the financial year, meaning that our financial year will start on the 1st of July 2020. It will end on the 30th of June 2021. So you can tell that right there in Jan, which is in July, which is the 30th of June 2020, our accumulated depreciation was that much, meaning that the carrying value on that day would have been 171,520. So how did I get that? I simply took that 335,000 and I minus from it 163,480. And this is the carrying value. But they said on the 1st of July, the accumulated depreciation amounted to that, which is what we just did now. It was given to us. Okay. So this was simply given to us, and there it is over there. Okay, it's given to us there. So that is accumulated depreciation at the beginning of the year. Then they say depreciation is calculated at 20% on carrying value. So for this old vehicle here, we're gonna calculate depreciation for the current year. But question is, for how long though? All we know is that we're gonna calculate it at 20%, but I don't know for how long, because that is 20% per annum. So it will be, it's either 12 over 12 if it was used for the entire year. Here is the month over which the asset was used. Okay, so we need to check out for how many months if we use it in the current year. And then they told you that a new vehicle was purchased on the 1st of June. So we know that there was a new vehicle that was purchased here on the 1st of June, 2021. And then they said it uses a different rate. So we don't depreciate it at 20%, we depreciate it at a different rate. So we don't know what the rate is. And they gave us the depreciation of this new vehicle, which is 13,300. I'm just going to go back to this old vehicle here. Note that the old vehicle was sold on the 1st of January 2021. So it was sold halfway through financial year. It was sold halfway through the financial year. meaning that for the current year, we only use it for 6 months. So this old vehicle was used for 6 months. So if I was to calculate current depreciation on this new vehicle, it will give me that 171,000, 171,000 520. You multiply that by 20%, you multiply that by 6 over 12, meaning that on these old vehicles, the current depreciation on the old vehicles will be 171,152. Please note that we're also given the depreciation of the new vehicle. Okay, so now it means that we have the depreciation of the new vehicle, which is 13,300, making our total depreciation for the current year the sum of those two. So I'm going to add 13,300 to this to figure out how much is my total depreciation for the current year will be 30,452. This is on both the old vehicle as well as the new vehicle. That is the depreciation for the current year. And then they gave us nothing about this new vehicle. We don't know what the cost price is. All we know is that accumulated depreciation on this old on the new vehicle is 13,300. Let's move right along. Okay, so how do we do this? I'm going to start with land and buildings. Land and buildings at the beginning of the year was 1,000,000. At the end of the year, it's 1,850,000, meaning that we bought a new land and building, which is 850, and that results in a cash outflow. So you're gonna write that and the tangible asset purchase note is 850,000. The vehicles was 171,520, and then I gave you the disposal at carrying value, which is 154,368. I will explain how I got that later on. And my current year depreciation is 30,450. You were given the carrying value at the end of the year, but this was given to you in the answer book. So in the answer book, you were given that the carrying value at the end of the year was 167,500. So basically, this is given to you in the answer book. Okay. This handout that I'm working here with here is 100% correct. So if there's any mistake I made in your answer book, please correct it. I picked up a couple of mistakes there. So make sure that exactly the answer book that you have and the information book that you have is exactly the same as this handout here. Okay, now you'll realize the only thing we're missing here is additions at cost. So question is, how do we calculate additions at cost? Note that if we were not given that carrying value at the end of the year, we're going to have two unknowns, right? Fortunately, this was given to you. We're going to have two unknowns. So it was impossible for me to calculate vehicles purchase and tangible assets purchase, right? And whatever you have there as purchase, remember to put it in brackets and it falls under investing activities, and you're going to put it as tangible assets purchase. When you put it in brackets, you're simply showing that it is an outflow. The reason why I wrote it in red is just it's an outflow. You'll remember that inflow is in green, outflows will be in red because that is bad cash wise. Okay. Now I'm just going to show you guys how I got this 30,452. So how did I get that? I simply calculated current year depreciation, but I'm going to start with the cost price, with the depreciation of the old vehicle. The cost price of the old vehicle was 335,000. Accumulated depreciation was 163,480. And the carrying value at the beginning of the year was 171,520. This is the carrying value of the old vehicles that we only used for 6 months in the current year. So to calculate depreciation of that, I took the carrying value and I multiplied it by 20% because you were told that it is depreciated. Depreciation is calculated at carrying value. So hence I multiplied that by 20% and I multiplied it by 6 over 12 because we only use it from the beginning of the year, which is the 1st of July 2020 until the 1st of January 2021, which is 6 months. We don't count Jan. So it's July, August, September, October, November, December. We don't count Jan because it was sold on the 1st of Jan. So we didn't use it for the month of January. Therefore, we cannot calculate depreciation for the month of January. Okay. And I simply took the current year depreciation of the old vehicle and I added it with the new vehicle, which is the depreciation of the new vehicle. That's how I got that 30,450. All right. Note that, as I've said, there were two unknowns, which is additions at cost and carrying value at the end of the year. Additions couldn't be calculated using this table unless we were given carrying value at the end of the year, which is given in the answer book at 167,500. All right, now you're going to just work backwards by simply using reverse operations. So basically, you're going to take this 167,500 and 30,452 and 154,368 and then minus that 171,500. That will give us the cost price um, of the new vehicle. So this was given to you, as I've said. Now that's how I calculated the cost price, and I got 180,800. Now note that now I have vehicles purchased, just added with land and buildings purchased, it'll give you tangible assets purchased, which is 1,030,800. Or you could have used this method. Because of the new vehicle, you didn't have the cost price. I would have used this method. And we were given accumulated depreciation, which is the depreciation of the current year, because this was never used before. So it didn't have any accumulated depreciation or depreciations from the previous years. But you were given the carrying value because they told you that there's only one vehicle. So it means that whatever you were given as carrying value in your answer book, it relates only to this vehicle that was purchased. And I would have made I would have worked backwards by simply taking this 167,500 and added with 13,300. Just reverse operations to get the cost price. The cost price is going to be 180,800. Okay. And that's how I would have calculated the cost price of the new vehicle that was purchased. This is it for me for today. I hope to see you guys tomorrow. Please make the corrections on this classwork and make sure you have written everything. I will definitely see you guys tomorrow. And just remember, I just need to check how many will be available on Saturday, because if I'm only going to have a few students, I might as well recording Saturday's lesson and post it. But I just need to, so I'll calculate how many students will be able to make it. I'll get the details from Mrs. Actuary when I get to school today. Okay. Enjoy the rest of your day, guys, and yeah, keep on studying, study smart. To everyone.